Hey everyone, welcome back to the channel. I have Michelle Tiraborelli, Senior VP of Closed-End Funds at Brompton, but that's her official title. I think we all know her a better title, which is the Queen of the Split Funds. How are you, Michelle?
I'm doing great. Thanks, Adrian. Nice
Thanks
to
so
be
much
with
for
you.
taking the time. I actually met you in person in Toronto. It was really, really cool, but it was literally for 7 seconds because your booth
I
was
know.
packed. And I was, I had no voice by the end of it. It was just a crazy, crazy thing. But here we are. There we go, right here.
Yeah, that was a
Uh,
fun day. Yeah, it was great to finally meet you in person.
yeah, I mean, I wish I would have had more time to talk with you. I had all kinds of questions for you, like what part of Italy you're from, do you speak Italian? But we had no time. But next time, we'll see
Well,
what happens.
next time.
So yeah, the reason I brought you on is that so split share funds have been on fire lately because a lot of them have Canadian financials. They've done really well, and you had Quadrivest announce bonus shares or splits when it comes to FTN and BK, and you guys have recently announced a very very similar thing as well for LBS and SBC. Your two Canadian financials. So SBC is the six banks, LBS, six banks, the four insurance companies. So I'll let you explain it because there's some questions behind it. So the articles are here. They're on your website. And by the way, if anyone wants to go, you could go on LBS. You click on news and you get the article here. But it looks like LBS 10% bonus shares, SBC 17% bonus shares. Please explain to the
Yeah.
audience what that means.
Yeah, well, I'll start by just, explaining the reason why this has come
Hmm.
about. And I think you had already touched on it. And these funds have had a really strong performance. Seen a lot of NAV growth, over the last year, but also the performance has been, really strong over the history of the fund, and they've been outperforming their benchmarks. And as a result of the strong performance and the NAV growth we've seen recently, the funds announced a share split of the Class A shares. And this is a way to put more distribution dollars into the hands of investors as a result of the good performance. So, for example, LBS, so Class A shareholders, for every 100 shares they hold, will receive 10 bonus shares on the date of the share split, which is later in October.
Okay.
So for every 100 shares you hold, you'll get an extra 10 shares. And because the per share distribution amount does not change, 10 cents a month per share for the Class A shares, that means that shareholders will receive an additional 10-cent per share distribution on the additional shares that are received. So effectively, it's a 10% increase in the income that shareholders will receive at the end of the month.
Yeah, that makes sense. And for SBC, it's a little bit more. It's 17 shares, bonus shares for every 100 that you have. So, yeah, is this so why do this instead of just increasing the distribution, for example? Is it because of the split share structure? You want to always leave it at 10 cents a month?
Yeah, so that's a really good question. So yes, it is a fixed 10-cent per month distribution, but there are, there's another reason to do a share split versus just increasing the distribution amount. And that's because there are really two benefits to buying Class A shares. One is enhanced growth potential by having leveraged exposure to the underlying portfolio of stocks. And the other is the high cash flow through the monthly distribution.
Yeah.
So doing a share split actually addresses both of those, features of split shares of the Class A shares. So when it comes to the distribution, by doing a share split, the NAV and the market price adjust lower by the factor of the split, which means your distribution rate increases when you have a fixed distribution amount. So that's one thing. And then the NAV resets lower by the factor of the share split as well, which means shareholders then have higher upside potential compared
Uh,
to when they did before the split. So it's basically resetting the NAV and the distribution to the NAV lower and the distribution rate higher.
okay, makes sense. I was just gonna ask you that question, by the way. So during the day of the split or whenever, I think it's end of October or something, you'll see
Mm,
the NAV basically decrease 10% on LBS, 17% on SBC. It's only normal. So,
yeah.
okay, in summary, you're keeping both monthly distributions at 10 cents. Of course, the
Hmm.
unit NAV has to be over $15 for you to get the distribution, but they're way above that now.
Yeah. Even
But
after the share split, there'll be ample coverage.
yeah, yeah, for
Hmm.
sure. But the fact that you're getting 10%, I guess you can quotes here, free bonus shares and 17% on SBC, it's kind of like you're getting a 10% increase or 17% increase in distribution, but it's still
Right.
10 cents a month.
Yes, that's right. Yeah. So the
Okay.
total dollar amount of income you receive from the
Hmm.
distributions will go up by 10% for LBS and go up by 17% for SBC. And the important thing for I think for investors to understand is that you have the same dollar amount invested before the share split and after the share split. The only difference is after the share split, investors will have additional shares,
Yeah.
and each share will be
Okay.
worth, yeah.
Makes sense. Makes sense. And correct me if I'm wrong. I think we discussed this a while ago in our 1 hour long split share fund explainer video. But when the price goes down of the class A, the leverage impact is higher. Is that what you meant before when you said you have more upside potential or?
Yeah, that's exactly what I meant. So if you think about just a simple example where you have a split share, you have a Class A share that's a $10 share and a preferred share that's a $10 share. The unit is $20. The preferred share makes up 50% of that total unit value, which means you have 50% leverage. If the Class A share is higher than that, you have less than 50% leverage.
Makes
So,
sense.
higher the Class A share NAV, the lower the leverage.
Okay. Okay, cool. It makes sense. And what if you have like let's say you have 105 shares. What if you have an odd number? You don't have what happens? Do you get it in cash? Is it just rounded? How does that work?
Yeah, so it'll be no fractional shares will be issued, so
Okay.
it'll be rounded down to the nearest whole share for based on the total number of shares that you hold.
Awesome. All right.
Hmm.
So yeah, I mean the split share funds have been doing really, really well. I think they're very there is a bigger learning curve, right? They're more complicated to understand, but they've been doing really, really well. My favorite by far part about them personally is they're closed-end funds, which means you could go NAV discount hunting, right? I actually have a weekly report where I do that and I tell people, especially for the Brompton ones. And in case people don't know what we're talking about, for these closed-end funds, they're not ETFs. ETFs are open-ended. These are closed-ended. So, for example, let's just take LBS right now, which we just talked about, SBC. You see that the current price is 11.28, 13.41, but the actual value, the intrinsic value is higher, 12.26 or 14.26, which means it's trading at a discount to NAV. And this is a pretty big deal because the Class A shares, and maybe you could re-explain it real quick, do have a redemption feature, right? Where I believe at a certain point of time, you're actually able to hand in those shares at the NAV price. And typically, correct me if I'm wrong here, what happens is as we get closer and closer to the redemption date, they go closer and closer to the NAV. So discounts are very important. It's very attractive, a good buy time. Can you confirm that redemption feature?
Yeah, so that's right. So each split share fund has what's called a maturity date. Doesn't
Mm-hmm.
necessarily mean the fund's winding up at that date. It's just a date on which the preferred share dividend date rate gets reset. And but on the maturity date, shareholders have an option to tender shares for redemption at NAV. So that's a feature that's available that, provides some sort of assurance that you can get NAV if the shares are trading at a discount. So, historically, when Class A shares have been trading at discounts to NAV, the forward returns have been quite strong. So, and that's partly a reason why is that feature does exist for these shares. Yeah.
Yeah, it's super interesting, right? A lot to
Mhm.
look at and keep track of. But personally, I bought some LBS personally because I knew I saw such a big discount on NAV. I'm like, I have to get this. And then I saw the stock, the split, and then I was like, well, what if other ones do it? So I just decided, to be honest, because I'm a really lazy investor, I'm gonna just put it in Class A. So in case my audience doesn't know, and I did a couple of videos on this with your coworker, your compadre Chris, who I also met in
Hmm.
person, really cool guy. So you guys have an all-in-one split share fund Class A ETF. So if you're I tell people if you kind of like split funds, but you don't want to babysit, maybe they seem too complicated, you could get something like this, which is very, very unique in Canada. It's kind of like the Class A version of the SPLT ETF, which is an all-in-one or focuses on the preferred shares. But this has a bunch of Class A shares all over Canada, not just Brompton as well. You have the Quadravest ones, you have some Middlefield ones, and of course you have a lot of Brompton ones. And are you guys like actively managing this? I did discuss it with Chris, but maybe you could, in case people don't know, you guys are actively managing this to make sure you have the top split funds are make up the biggest percentage, but you're also hunting for discounts as well, right?
Yeah, that's right. Yeah, that's where the active management comes in.
Hmm.
We're Brompton's been managing split share funds for 20 years, so this is an area that our team knows very well, and we understand how these funds work and where the opportunities are. So our portfolio management team does actively manage the portfolio. Obviously, some of the larger, more liquid holdings will have heavier weightings usually, but
Yeah.
there's definitely opportunities to identify, opportunities for capital appreciation that, will help the returns of the fund. And, it's just an easy way for investors to get access to split share funds and access the benefits of enhance growth potential and, high monthly cash flow. And with the ETF, investors should understand as well that there is no $15 NAV rule when it comes to the monthly distribution.
Yeah.
This is, a targeted 12% monthly distribution. And yeah, there's no minimum NAV requirement for payment of that distribution.
Yeah, I highly recommend my audience check out this video. You and Chris talk about it and explain it in detail, but it's one of the definitely the negatives with the split share fund Class A shares. Of course, it doesn't happen often, but sometimes in a bear market they go under that threshold. The distribution gets suspended for the Class A shares, but you don't have to deal with that with the ETF, like Chris says in the video I just watched today. You guys are you're looking for a smoother experience with the distributions. You'll have a
Mhm.
12% target. And it hasn't been a year this is out, so obviously we can't talk about performance, but I've checked it out for myself and the performance has been really, really good. You guys have already increased the distribution already from 10 cents to 15 and a half. And yeah, I mean, to be honest, and I'll throw you guys a compliment. The only reason why was getting LBS instead of this ETF was because I like the Brompton split funds more. So I wish there was like an all-in-one Brompton only split share fund ETF, but you guys
That's
have
nice to hear. Yeah.
yeah, you guys have you have all of them in here. And
Yeah.
once I saw, FTN dude and BK dude and SBC and LBS, I realized, well, look, they're all pretty much in here. ENS is another big one that's trading at a big discount as well. So I said, you know what? I'm lazy. I trust Brompton. They're charging, I believe, what a 60 basis point management fee to manage all that for me. I'm just gonna go with Class A. So yeah,
Yeah.
just want to let you know that.
Yeah, you can see like the NAV there, 1266.
Yeah.
This came out at $10 initially. So
Hmm.
that's good about a NAV growth plus, the monthly distributions. So yeah, it's a good option for, easy access to the split share market. Of course, the $15 NAV rule for distributions, it does serve a very important purpose for, the individual Class A shares, and part of the reason why the performance for those individual Class A shares have been so strong. These funds are really doing, what they're designed to do, which
Yeah.
is provide growth and cash flow. And in the case of LBS and SBC, in the press releases, you can see the performance tables at the bottom of the press release, and how the returns have stacked up to the benchmark indices. So that's, showing Class A shares of LBS relative to the financials,
Hmm.
TSX Cap Financials Total Return Index. So you're seeing outperformance over 1 year, 3 year, 5 year, and 10 year. And now this is performance that's net of fees for LBS, and it's also total return, so it factors in the
Yeah.
distributions.
And it's
Um,
NAV returns. So if you're
and it's
buying it at a discount, you're even better off. So yeah, I mean the total returns speak for themselves. I mean these a lot of people don't know these split share funds, especially from Brompton and Quadrivis, they've been around for a really, really long time. So we have a lot of data, and the returns have been astounding. And now you guys have an all-in-one ETF solution, which makes it even easier. I'm just curious. So, I did discuss this with Chris. I did notice that, okay, you guys do have the bigger large cap ones, but there's some small ones in Canada as well that are lesser known. Purpose has a bank one. I think Harvest has a healthcare one. I also noticed, I had no idea, Nine Point has one called NPS, and this
Yeah.
one's trading at a pretty big discount as well. So I'm just curious, would you guys consider putting maybe a smaller, less liquid one in Class A if there's a big discount, or now we're just sticking with more the big cap ones? I don't want to put you
Yeah.
on the spot here, but I'm just curious your thoughts.
Yeah, I think you have to weigh, the opportunity, whether, is it worth it to add something that may be a smaller name, less liquid. But if it's something that will add diversification to the portfolio, perhaps that's, better reason for holding one of those.
Awesome. Yeah, it's a diversified Canadian, blue chip Canadian stock. It's kind of similar to DFN. It has a lot of financials, obviously, but also other stuff as well. So
Yeah.
that's all the questions I have. Congrats on the success of your split share fund
Mhm.
suite. And I think Class A is just a marvelous idea. Again, I wish it was only Brompton ones because I think you guys do it the best. But hey, I swapped my LBS for Class A just because I'll let you guys do the work. I rather do other things with my time, and I trust you guys. So unless you have anything else, that is all I had today. Thanks so much for your time and the explanation.
Yeah, thanks, Adrian. It's great to talk to you.
All right, take care, Michelle. Bye bye.